Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Welcome, ladies and gentlemen, back to episode 163 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. First thought this morning, it's beginning to look a lot like Christmas, right?
Yeah, winter holidays around the corner. There's always that week sip in between the Christmas holiday and the New Year's holiday, it's always kind of a weird week because a lot of investors, a lot of traders are out, and so volume drops, and the traders that remain, then their voices become louder, right? And those traders who remain during that season tend to be kind of the more extreme traders, and along with being extreme traders, you get kind of extreme opinions. So I always warn my program participants that on the week after New Year's to expect a big correction compared to the week between Christmas and New Year's. So something to keep on our radar.
And I imagine the day of the week when Christmas Eve and Christmas during the trading week kind of dictates what some of those patterns might be.
Hmm.
And another thought I had this week from our many episodes on the show is the one phrase that you've said frequently is the bears climb up the stairs.
The
Right, no,
bulls
the
climb up the
Bulls the
stairs.
Bulls climb up the stairs, the Bears jump out the window, and I feel like we
That's
had one
true.
of those moments this week where we're looking forward to the Fed decision, and although a rate cut, a lot of the markets were scared by that. What are your thoughts on that, and were you surprised at how big of a pullback we got?
Uh, it was not expected, but I'm actually pulling up a couple of documents that I didn't have up in advance, and so I'm going to pull them up. But as I'm pulling them up, what I'm pulling up is two things. One is the meeting actual transcript, and anybody can go out on the Jerome Powell transcript, and will be a PDF of the actual not only transcript of his press conference, the meeting announcement that he gave, but also the reporters who were in the room, a transcript of their questions, and finally his answers. And I actually encourage, just because I know the folks who watch this show want to be more in the know than just watching everyday talking heads, I encourage you to take a moment. Here it is. I just pulled it up. Uh, Read this out. This is from December 18th, so this past Wednesday. And it's a few pages, only 7 pages long, but don't worry, spaced, and it's a very big font. So it's actually like reading about 10 pages of normal writing. And you should check it out because um, it's an interesting way, this dynamic. And SIP, these press conferences are not very old. There was a time where the Fed would do stuff, monetary policy changes, and then that was it. Like you didn't talk to the Fed. They were very much behind closed doors. And it was Ben Bernanke after the Great Recession who said, hey, the Fed needs to be a little bit more transparent and public focused. And so 4 times a year, we're going to have reporters come in and ask us questions. But you know what? Sometimes you almost think maybe these guys should still be behind closed doors because the reporters, as reporters do, kind of ask these leading questions that it's very hard to get out of. If you read the actual wording, a lot of the reporters and media these days, man, it is really bent depending on which. You could actually read this transcript and you'll read the questions from, say, a Fox or a more neutral, like a Bloomberg type reporting agency versus like the Wall Street Journal or the New York Times, you could actually see the bend on these questions about where they wanted to lead Chairman Powell. And Chairman Powell did his best to do. I don't actually, I feel bad for the guy because to navigate these very charged questions would be very difficult. And basically, what came out of it, and here's the other thing that I wanted to show you guys. I for those of you guys that are playing around with Chat GPT, I mean, what an amazing tool. This morning, I took, and I'll show you guys exactly what I did. Here it is on my screen. I took the meeting minutes, the things that I just downloaded, that PDF, and I gave it to ChatGPT, and I told it to summarize the key takeaways, right? And so it did, and it actually pulled pretty unbiased information. But the main thing that came out, Sip, was that these reporters were like trying to get him to give an opinion on the upcoming president elect or prior President Trump's fiscal policy, right? Because monetary and fiscal policy go hand in hand. And basically, what he kept coming back to was, hey, we don't know what's going to happen. So uncertainty has increased. And what we see right now is inflation is not as under control as we thought it would be by the end of the year. So we want to be very measured. We want to take things slow. And he gave an analogy of driving a car in fog and rain. And he said, if you're in fog and rain, you don't go ahead full blast. You kind of slow things down. And so we're going to slow down our rate drops. Possibly, he kept saying possibly, but what investors took away was, hey, he's scared about the upcoming President Trump's new fiscal policies that aren't even agreed upon, right? But it's basically rhetoric, and that he's putting on the brakes. And so that caused a huge sell off in a lot of markets, and a lot of money moving to more safe havens. Like we saw bonds go up. In fact, I'm just talking here, Sips. Stop me if I'm
Well,
talking too
that I
much.
mean, you kind of gave us the setup for why we had the market drop. And, I almost feel bad for the audience because the last couple of shows have been pretty boring because the market has just been creeping up and hitting those highs. And when we look at that 6,100 level on the S&P, a lot of chop there. And so what was the straw that broke the camel's back? Well, it was the Fed meeting, or the Fed decision, and a lot of jumping out I mean, you're talking about like 2 or 3 hours of making up for an entire move to the upside. And so, does that shock you, or is this kind of helping us look at a longer picture that maybe we needed a pullback in the short term?
Well, I'm going to come from a completely technical and data perspective right now. First of all, we had what we call a pennant pattern forming. This is a consolidation pattern, right? You can see price was consolidating, and you can see my free indicator that anybody can go and download. You can see that my indicator was indecisive almost day to day. It was like telling us, hey, top, bottom, top, bottom. That's very much specific for a consolidation pattern, a pattern where people are sitting on the sidelines, sitting on their hands, but they're getting antsy, they're getting fidgety. When you make somebody sit still for a long time, they get in their head and they start creating bigger and bigger scenarios. I have one of our cars, one of our Mercedes cars, in with the mechanic right now at the Mercedes dealer. And Mercedes dealers, I have to go on a tangent here, Sip. They need to learn to be more transparent because they leave us customers sitting on our hands. And I'm getting more and more agitated in my head because I don't know what's going on with this car. And I know no matter what I do when I bring the car to the Mercedes dealer, it's going to cost me an arm and a leg. And so I'm starting to get crazier every day. They don't communicate with me. So that's basically what happened in the markets, right? We weren't giving any information. There was a lot of uncertainty. Of course, we know kind of the backdrop. The market's completely overbought. There's a lot of money that's not usually in the markets now circulating in the markets, not just this market, but the crypto markets, especially as well. There's money going in there. There's a lot of FOMO, fear of missing out. Today, we're going to talk a lot about emotions because that really drives the markets. And then it wasn't even the decision that the Fed made. It was like simply some forward forecasting in their words. The decision came out as expected. In fact, if you look at the minute by minute move on 2 o'clock on Wednesday, when the quarter point drop was announced, I mean, the market was like, yeah, this is good. And it started to go up. And then these questions came at Jerome Powell and he answered them honestly, but as best he could. And these sentiments came out within people, this fear of uncertainty about what's in the future. And then the selling just happened, right? But in Trading Trainer, at Trading Trainer, we call this a transient, meaning temporary. External, this is news that wasn't organically in the markets. It's not about, what company is doing better, who did earning. It's an external influence on the market. Stochastic, transient, external. Stochastic, which means it's it's being received and investors are reacting to it at a higher decibel than typical news. Transient, external, stochastic, shock. And when I tell my program participants, hey, we can categorize this as a transient external stochastic shock or a TESS, it means that soon it's going to be probably unwound as soon as that news is in our rear view mirror. And it turns out investors and traders these days, the rear view mirror is getting shorter and shorter in duration. It used to be weeks that it had to be in our rear view mirror before we'd start to see a recovery. Now it's a matter of days. In fact, if you're looking at my screen, you can see the up bar that's already forming today after the pullback on Wednesday's news. And I already see the other big piece of news that was in the markets was this news around, is the government, the US government, which employs quite a chunk of the population, and the money that goes into government workers' hands, civil servants' hands, then trickles down to the rest of the economy because government workers will go to a coffee shop. They'll go and buy Christmas gifts in bulk versus being minimalist and all that stuff. I found this website that you guys might want to write down. It's called Kalshi, KASH track shut down. Last night, this number was at 66%. And today it's dropped down to 53%. You can kind of see historically, what this number has been. This is based on the sentiment, very much like the CME indicator on rate hikes and drops. This is just a third party indicator, and it's been pretty accurate. And so the fact that there's people afraid that the government will shut down and that money won't trickle through the economy through government workers has also been kind of a weight. But for me, seeing this number drop from 66 53 in just the past couple of really hours kind of helps me understand how fast the recovery is happening today versus yesterday. Yesterday, there was kind of a sentiment of, oh, things are bad. Today, it looks like there's a little bit, a bottom is being found. So, this is all the news headlines. And if you guys, I know it's hard, but if you can remember going back to 2016 through 2020, this particular incoming president loves to use the media and loves to spin headlines. He's a marketing expert. He's a sales expert, and that's what they like to. Typical civil servant likes to just do their job and stay under the radar. And so if you remember those times, and you can go back and look at the charts, transient external stochastic shocks was the name of the game. So we just have to kind of figure that out. And that's what I'm always thinking about. How do we profit from this as traders?
Yeah, I mean that's why you started the program, Trading Trainer, and that's why we have the show so that we can provide some of these insights. Looking at the chart, when I look back at the gap, I believe that's when President Trump was nominated, and so we've almost like gone back to break even for the Trump trade. But you're absolutely right, AJ. This incoming president loves to have more of an impact on the markets than the current administration, which now even more so, I would say, with the backing of Elon Musk and Elon Musk owning Twitter and Donald Trump owning Truth Social. Like when we talk about the media being, incorporated, never has it been so intertwined, at least in the modern era. And so, yeah, we as traders have to try and dig into the psychology. It looks like you pulled up your retracement tool.
Yeah, I totally did. And with yesterday's close being where it was, yesterday we closed below our 100% retracement line. Now we're still in this red zone, which tells me that, hey, we may be setting up for some upcoming sideways chop. So this may be, the end of this rally. We'll have to see. I'm probably more than confident that this current rally is at an end, but I've been wrong so much this past year. This rally has really been resistant. So I'm maybe as high as 55 to 60% confident. But, I've been forecasting a moment of sideways chop. I've said it, 2025 was the year of sideways chop. I've gone back on my word. But I'm seeing the pattern, although late, kind of playing out here. But I think we have to see a little bit more maturity in this sideways channel. But yeah, that's what my retracement analysis is saying, is that, hey, it's the time of sideways chop. And I've got one more thing to show you before we move on, Sip. And that is, remember we were looking at that 3-year versus the 10-year bond numbers. So the 3-year, let's actually look at bond kind of breakdown. So here you can see my 3-year bond, 3-month, I'm sorry, 3-month versus 10-year bond ratio. So the 3-month is at 4.35%. That's where it's currently, the yield is currently set. The 10-year is at 4.506. Now, for a lot of 2024, we saw that this was the opposite, that it was more beneficial for an investor to invest in the shorter term bonds than the longer term bonds, which is kind of topsy turvy. But we were looking at the reasons behind that, and maybe it was because of quantitative tightening or whatever. So we weren't sure what to make of it. But when I come back and I look at this ratio, and this is 1 year that we're at, is been lasting for more than a year. But let me go to 5 years in my little chart here. It'll load up and see. It was probably about autumn, about a year ago, a little bit more than a year ago, maybe 15 years ago, that the yield curve inverted. Let me just look at all time here where they've been comparing. So what I want to point out, you can see this little dotted line right here is this 0, right? You see this dotted line? Every time, and I've said this before, every time the yield inversion curve has inverted and then come back above the 0 line, which it just did this week, that has been the indicator of an upcoming recession. And again, There's more variables involved this time around with the Fed doing quantitative tightening than there has been in the past. So I'm not saying 100%, but it's just ironic that we're getting all of these price patterns right now, all aligning and saying, hey, we're going to go sideways choppy, if not pull back a little bit for 2025. I think, Sip, it wouldn't be a bad idea if you and I, when the new year starts in January, take a moment during this show and really take a look at what we think 2025 is really going to be. Like, let a few more weeks of data come in.
Totally. And yeah, I feel like that big move in the market may be, the last of the season. Just because, today being Friday, Christmas Eve on Tuesday, Wednesday, I would imagine the volume staying low through at least Thursday, Friday, like you said, the angst traders in there moving the market, and then we've got the new year that next Tuesday, Wednesday. So we may be. I think the chop makes a lot of sense, which I think allows us traders and investors to maybe take a step back and assess your plan and take a moment to head into the new year with a good mindset. And we're gonna have a pretty interesting, unique guest on here today, Dr. David Bonanno, who is a renowned psychologist helping work with traders specifically, which is pretty wild because as a trader, there's so many psychological ebbs and flows that one goes through, and those that have never traded may not know the emotions, but those that have, man, it is a roller coaster. One day you're on top of the world because you're making money. The next day you're depressed because you've made it all back and you questioned everything that you're doing. And so I'm very excited to bring him on and have a discussion. AJ, this is a topic that you discuss with your members all the time, right?
All the time.
All right. Well, let's go ahead and take a break. Everyone can catch their breath. We'll bring David in momentarily, and he'll give us his insight. I mean, I'm very curious to learn the power of the mind and the markets and getting right and bringing it all together to help make better investments and better trading decisions and just an overall positive mindset. So sit tight, folks. We'll be back in a jiffy with our special guest to talk about the psychology of trading. So we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
And the webinar that AJ was just talking about is in the short links link that we just put it in the chat. In addition, there you can learn a little bit more about the program Trading Trainer. You can learn about some of the coaching options. You can get AJ's free indicator. You can follow some of the channels. A lot of good stuff. But for anybody new to the show that's really interested in learning the core ideology of some of AJ's methods to investing, this workshop is great. 4 shortcuts to growing your investment income into a 7-figure income, or investing account into a 7-figure income. Okay, now that we got the promo stuff out the way, let's bring our guest on. So our special guest for today is Dr. David Bonanno, who is a psychologist for the traders. So AJ, you go ahead, cue him up, and we'll bring him in. What was your thoughts, and why were you excited to have David come on?
Well, because I understand that the market is completely emotional and that individual investors are completely emotional. And Dr. Bonanno, when we can control our emotions and make decisions and follow our trade plans, regardless of what's happening around us, we get the upper hand. And so a lot of folks, disregard how much their emotions can change their decisions or can, guide their decisions rather than just sticking to the plan that we made when emotions were cool. So Dr. Bonanno is a way, and he's going to talk to us about, what goes on in our heads and how we can be better controlled. So I'm really excited to talk to him.
All right. Without further ado, Dr. Bonanno, thank you for joining us on the AJ Brown Show. Good morning. Happy holidays.
Hey, good morning. Yeah, thanks to you, and thanks for having me.
All right, doctor. So how did you go from being I guess traditional psychologist to finding, an area with traders and investors and finding an interest and even some tricks to help them along the way?
Yeah, thanks. So, my wife's uncle is a trader, and he actually saw me for some sessions, and he was telling me about the psychology of trading, and I think it's totally fascinating. So, I'm not a trader myself, but when I was reading about like the ideal mindset, the thing that just kept sticking out for me is that knowing what the ideal mindset is and actually having it are two entirely different things. So, and that has come up for me in my life and in my work as well, because like I'm kind of like a math guy and maybe on the spectrum or something, and I'm very logical. And I was always obsessed with why do smart people do stupid things? Like, why was I having like thoughts that weren't really good for me or emotions that weren't great? And I mean, like with my clients too, like we would both agree that they should like get out of a bad relationship, for example, and then they wouldn't be able to do it. Or one time I had a therapist say to me, like, the past is in the past, so it shouldn't be affecting you anymore. It doesn't make sense. And I'm like, yeah, no shit. What am I still doing here on your couch? So that's what like I come in. I created disciplinedownloads.com, which is really like a series of online sessions where it's automatic and it's like hypnosis in that it really interfaces with the subconscious part of the brain. But it's not hypnosis. You don't have to go into a trance or anything like that. You're awake and alert the whole time. But what it really does is like you were saying, we have a plan, and then when it gets hot, then what happens is our adrenaline takes over. So I'd like to just give you a little bit of like just talk for 1 minute, and then love to get into the conversation with you guys. But what I have done is I created a model of the understanding of how the brain works. And I used to be worked only with PTSD people, but it totally applies to traders as well. So, I finally did figure out the answer to why do smart people do stupid things. And what's going on is that there's really two different brains at work at the same time. And so I call one of them the robot and one of them the cat. So the robot is your logical part of your brain, and it makes sense, and it's makes decisions and all that. But that's not who we are. And the cat is the who we are as a person. It's our creativity, it's our wisdom, it's our personality, it's our emotions. And I call it a cat because cats are a pain in the ass, so you can't get them to do what you want. So if you could picture like a robot riding on top of a cat like a horse, pulling the reins, the robot can influence the cat. Like if you're telling yourself, I'm going to stay cool, I'm not going to have FOMO, and I'm just going to like wait till the perfect time. You tell yourself that, but then your emotions take over. And so what happens is your fight or flight system, your adrenaline comes in, and the cat is just way more powerful than the robot. So we like to tell ourselves that we're logical and that all we have to do is try really hard to be logical, but that's not good enough. And I was like kind of excited as I was researching trading psychology, because everybody was kind of saying the same thing. You should have, this is what the ideal mindset is, but then they don't tell you how to have it. So like just meditating or trying super hard isn't really going to cut it. And what I propose is that adrenaline is the biggest enemy of any trader. And it's not just fear, but also excitement. Like if you're overconfident, And so as soon as your adrenaline kicks in to a significant degree, your logical brain is supposed to be going offline because you're supposed to be acting or reacting. And so even though we like to feel like we're in control, we're actually less in control than we think. And the best way to fix this problem is to interface directly with the subconscious brain. So it's my method is actually called de-adrenalization, and I've been using that with PTSD people. And then I realized, oh my God, this is the absolute perfect thing for traders. So what it really does is it helps you to dial down your own nervous system in a way that's like really painless and quick and direct, and it's just better than anything else when it comes to regulating your emotions and to treat the problem at the root. Does that make sense?
I have a question.
Dr.
Do
Dave,
you and
question.
go ahead, AJ.
Absolutely.
No, it's on.
Go
Go
ahead,
ahead,
Sip.
AJ. I think we're having a little bit of a delay, but doctor, my question was uh day traders versus more long-term traders. I feel as if maybe the adrenaline is a little bit thicker for those that are sitting in the screen and clicking away versus AJ's approach, which I think he naturally tries to remove the adrenaline in his trading style because he doesn't go in when everybody's running around. His is very logic oriented. So do you see a difference in the day traders versus mid longer term investors?
Oh yeah, absolutely. Yeah, that sounds really like a good approach, AJ, to minimize the emotion factor right there. But yeah, when you're day trading, I mean, you're making decisions like you have to go with your gut, and you're like if you're in the woods and you come across a bear, you're not going to make a pro and con list of all the different options that you have, and you just don't have any time for that. So it's really kind of a question of processing speed, and if you can be dialed in emotionally, then yeah, then that's when you go with your gut as a day trader. You just make that decision, and then you don't have to keep second guessing it. So yeah, there's a big difference there.
So one of the things I have found, Dr. David, is that, you know, folks do not want to admit that the robot is not in control, that the robot is driving the cat. But at the same time, you know, when I look at my process, which is do things end of day after the markets close, after all these external stimuli are out of the way, make your decisions and then hard code it into, an automatic trader the next day. When I find folks that aren't finding success with that method, it's usually because they don't make the decisions end of day. They fall back to thinking that the robot is in control, and they wind up, entering into the trading session when there's all this external stimuli, and they start making these emotional decisions. So I guess my question to you is, somebody has to admit first that the robot isn't in control. How hard is it to, find somebody who is open to the idea of that, they need to be disciplined, that they can't do it, right? That's a big ego trip, right? How do you do that? How do you approach that particular decision that somebody actually does need some coaching on how to tame the cat rather than, thinking that they can do it themselves?
Yeah, that's an awesome question. Um, and as a matter of fact, like with the PTSD people, they could talk about their problems all day. And I've noticed that with traders, often like they'll schedule a phone call with me, and then they'll tell me all the stuff they're doing good, and I'm like, well, why are you talking to me? So I mean, it is good that people do at least say that psychology is super important, and I think like from there they don't quite know what to do. I believe that people automatically choose certainty over accuracy all the time. So like in our life, we have to believe that we are in control and that we're safe or whatever, and we lie to ourselves all the time, but it's subconscious. So when you're asking somebody to be aware of their subconscious motivation, and of course, like, keeping a trade journal is a great idea, but it's hard for you to be fully aware of all your subconscious um, inner workings, because by definition, it's not conscious. You know what I mean? So
Right.
I think like what one thing I am really impressed with when it comes to traders is like, their wife or their husband or their kids or whoever will be begging them to get help, to be a better person, to change their ways, and that won't do it. But when it comes to trading, they'll do anything to be the best trader that they can be. So I mean, yeah, it's that's what you have to do. I think we just have to admit, as scary as it is, from moment to moment, we are not as much in control as we think we are, and we are less of a stable character than we think we are, because the situation dictates what we do much more than anything else.
Well, and I've got to throw in there that I almost hypothesize that the traders that actually get past that barrier and say, "Hey, I need to see you, Dr. David," because, the ones you're seeing that you say are the most dedicated really truly are the most dedicated, because what I see is that sometimes that, or many times, that ego wins out, and they just decide to stop trying to trade and go back to working 60-hour a week salaried positions to live their life, instead of continuing forward becoming an investor. I see a huge dropout rate because people would rather just quit instead of going to you and getting some of the tools that you need to tame that psychological cat and be successful. And I see that that's the piece. That's the piece that they need to do, is just tame the psychological cat. And it's such an literally a phone call to somebody like you to give people those tools. But admitting that that's what you need, I don't know if it's a stigma or what, but admitting that that's what you need, people would rather just give up. And so I'm almost like, hey, it's as easy as just asking for the right help on how to tame the cat. And if people knew that they could just, go to you for a session or two, or maybe, a couple more sessions, and they'd be able to cross that uncrossable barrier and make sense out of investing, I mean, I think that that would be a no-brainer. But I just want people to be open to that idea, because that's usually just what I've seen is the difference between, not making it work and making it work is taming, I love that metaphor of the robot driving the cat, taming that cat.
Right on. And what's beautiful about my program is it's not live with a therapist, it's not live with me. It's like an app. So you're actually watching a video, and there's a I take people through different exercises, and there's a ball that moves across the screen, and that's how it helps you to like really get into where you need to be. If you go to the website, there's a free session, because I really do want people to try it. I think it's really impossible to know what it's all about unless you try it. And so it comes with all the conveniences of an app. You don't have to make an appointment with me or somebody else, and you don't have to admit to anybody besides yourself that you have a problem. You can do it anywhere at any time. And it just happens to be really convenient. I created an app that we ran the numbers. We had a statistician do this. It was more effective for PTSD than a live therapist. So, I mean, I know that this is really effective for any problem, and definitely for the ones that traders face, not to minimize what they go through. But it just never really took off with the PTSD thing, and I realized that this is the perfect way to use it. So yeah, you don't have to tell anybody that there's anything wrong with you. Just check out the website and try the free session, and then see what you think.
And there's a variety of
Well, that's cool
tools
because,
in the
you know,
ecosphere. And AJ, you and the trading trader community are one, right? So it's a community, it's more technical based, and it seems as if Dr. Bonanno has created a nice supplementary psychological tool because there's so many facets involved. And for me, this is the first that I've seen of something like this, Doctor. So congratulations on taking the lead here. I'm sure that this will be a very popular episode for us. But AJ, you did have a thought, and I cut you off there. I think because the lag. What did you want to add there?
No, I just wanted to say that this was the fact that you created this app that, people can go and do this on their own, not need to do any sort of like that. I really celebrate you for taking this approach and making it so that folks can get this technology. It's almost like a technology that you developed. Take this technology and make it work for them. So I'm kind of stoked. I really think that this is like cutting edge stuff that you've created, which is why I wanted to have you as a guest on the AJ Brown show. Because I think all of my viewers can totally benefit by just checking out some of the free stuff that you've got on your web portal, never having to like, it's not traditional, therapy or talking about your problems. And the
Right.
fact that you came from it originally for a PTSD thing, but then realized it works, whether it's a fear of loss or it's a fear of missing out on investments, whether you get too excited and become overconfident or whether you're always playing it safe, the same tools work, right? And so it's really
Yes.
neat that you have created this technology. And you got to tell us, I know that we put together something special for the viewers of our show, right?
We did, absolutely, yeah. So, for the listeners of this show, they can buy one core, like it's a session, and then you get a free session and the ebook for free as well. So there's a promo code that we can give you, and I'm actually having a little bit of technical issues, which is a little embarrassing, but we'll have it all worked out. And of course, if you ever have any trouble, there's my email address right there. But yeah, I would love for people to just try it. See, like one of the problems I had with the PTSD population is it's so new and unconventional. And it doesn't quite make sense at face value. So, I mean, I've had incredible results with traumas or helping people to get over phobias or any type of fear. And then I can tell them all about it. And then they'll say, like, oh, well, I think I'm just going to use my copay and my insurance and talk to somebody for the next 7 years every week. And I mean, it has been very frustrating. That's why I like working with traders, because if they think that it'll work, they will do it. So yeah, there's also
Yeah.
a quiz that people can check out to see, maybe what kind of work they might need or areas of improvement for their mindset. And then yeah, there's the ebook, which I think will explain everything very well.
So yeah, guys, and gals and people who are checking out our show, viewers, the code is AJ Brown. It's all capitals and it's all one word. There's no periods or anything like that. It's AJBROWN. And when you get to his website, peruse around. Check out all the freebies and the stuff like that. And if you want to take advantage of that special bundle that we have here today, just put that into the promo code of the shopping cart, AJ Brown. I think we just put it into the chat. And you'll get all the benefits of being a viewer of today's show.
And I'm sure if any of the guests mention that they saw you on the AJ Brown show, Dave, you'll take care of them. You know where they came from. Love. Personally, I think there's a lot to this. I'm going to go ahead and check it out. We're already getting some good feedback from some of the audience real quick. Anita says, think you guys have hit the nail on the head. However, I feel there's are variables. My issue is extreme fear of loss. I'm sure extreme fear of loss. Greed is one that personally affects me. But it seems as if you have a good plan and an approach. And anyone that's interested in learning more, the links are in the chat. Head on over there, learn more about the course, and if they have any other questions, Doctor, they could reach out to you. Yeah.
Absolutely.
All right. Well, we appreciate you.
And I gotta say, Sip, guys, I've been checking out the technology, and it's pretty rad. It's just a few minutes on your own, watching the dot go by, checking. Try it. Try it.
All right, Doctor. Thank you for taking some time today out of the holiday schedule. We hope that you enjoy the rest of your Friday. We hope that you enjoy your Christmas, your New Year, and all the best of luck in helping guide our trading community and in getting the right mindset to succeed in the new year. So once again, thank you very much. We truly do appreciate it.
Oh, thank you guys. This has been really fun. Thanks.
All right, Dave, we'll take it easy. Awesome stuff, AJ. The greed part to me is just the hardest psychological battle because you feel like you're on top of the world, and when something goes wrong, you're like, I'm not the man anymore. I'm not as
Down in
good
the
as I
dumps.
was. And you know more than anybody.
Man, I totally have been checking out Dr. David's little courses that, and he's doing something with this dot while you're watching the course. And I don't know, but I've already, felt in my own personal, especially some of the day trading that I do just for fun, already a better grip on what controls me. And I don't know what the magic is, but I know that there's a lot of cutting edge stuff out there, whether it be EMDR or hypnotherapy or those things that are not just traditional, going in and sitting on the Freudian couch and talking about your problems. So I'm stoked. I'm in. I'm checking it out, and I hope our viewers do too.
And the one thing that I felt good about in that conversation is from your approach to trading, always having your risk parameters in place. I think that you limit that
Yeah.
fear right off the bat before you even take a position because you have those parameters. And so that's one of the crux lessons of being a member of the trading trainer community, taking your strategies and implementing them. And so for the rest of the show, let's see if we've got some opportunities where we could, one, apply this psychological approach and then some of your technical perspective. So I believe our pick of the week for this week is the same one from last week. We're just following up to see if there was a movement, and that's CSX ticker symbol, or CSX Corp ticker symbol. Yeah.
Yeah. CSX is where it's at, folks. And I know a lot of you have been saying, well, CSX is, it went below the level. It's down at $31.50 instead of 33. Maybe it's not a good trade. I'm standing behind that pick. I am still going for, buying some CSX. Today, we will probably get an end of day signal, which means early next week. We'll look for some follow through. We'll look for the volume validation as well, because we want to make sure that we've got all of those in alignment. But I'm still looking to go long. To me, instead of a missed opportunity, it means I'm just getting it at a much better price. So I don't want you guys to take this off your radar. I want you to make sure you're looking at CSX. Again, the trades that I'm interested in are either buying CSX stock in lots of 100 or buying that CSX September 2025 $22.50 call.
And interestingly enough, that down market is still waiting for your green arrow to give us a buy signal. And so I guess we'll just continue to wait because it does seem to be doing a pretty good job of calling those. So if you want access to that indicator, once again, the link to that is on our links page with the specific URL in the scroll bar. So It's as simple as that. Just wait for the buy arrow to confirm whether you should be getting in. So AJ still keeping an eye on CSX Corp. All right. We've got a few other names that I imagine we can run through rather quickly. The first one, Liz from Chicago wants to know, AJ, is there anything going on in gold, the gold market? On the equity side, the play there is El Dorado Gold, ticker symbol EGO, but there tends to be a correlation with the commodity, right?
Mm-hmm. Oh yeah. Yeah, Eldorado Gold definitely had, you can follow kind of the gold price and you can see where that's at. So we've always, Eldorado Gold is constantly on our watch list as well, Liz. You can see that we probably have what we call a step function change in the sideways channeling. Instead of being 16 and 18.25, it looks like I'm going to pull us down here a little bit. It looks like we're down here at probably around 15 level of resistance that is still maybe not totally mature, but maybe somewhere around 17. So now it's 15 to 17 is kind of our level of support and resistance. Coming off of this bottom, I bet, Liz, this is what you're looking for. Again, we want to see our arrow. And I would actually suggest, right now I'm looking at the confirming indicator MA. I'm going to switch to the confirming indicator MACD. And it's set up as the fast MACD calculated on volume weighted average price. And so I'm waiting for that light blue indicator arrow. And again, I check these things after the market is closed. And if I get one, I then have the trade plan to trade it the next day. So I'm waiting for that light blue arrow to appear after the market's closed. It might appear as early as this evening or maybe in the beginning of next week. And then I would want to buy some EGO at this new lower price. I would either want to buy some EGO or we can use our options lookup tool. Let's see if we could pull that up. There's our options lookup tool. Let's go to EGO. I'm looking at all my strikes and I'm looking at my price components. And here it comes. There it is. I'm probably looking at the 2026 option, and I'm probably looking at, I'm probably looking at, I don't know, either I like this $7 strike. It's kind of got a very large bid ask spread, but I think that might have a lot to do with the transient external stochastic shocks of this week. So when I'm ready, when I get the arrow, I'll revisit the options lookup tool. I could see possibly doing this $7 call or just buying the stock. I mean, the stuff is cheap enough, at, $15, 100 shares of this, $1,500, that might be a better investment. So yes, I see what you're seeing. And yeah, just wait until you get the signals. Good eye. Good eye, yeah, Liz.
All right. Moving on to our second name, which I'm a little bit interested in your take on this. This is Chris out of Montana. Wants to know about Nike. Nike's in the news this week. I believe they released earnings and it's moving the shoe market, is what I kept hearing.
And so Nike, yeah, they've got earnings. Earnings were released after market close yesterday. So today is the day. My question for you, Chris, is did you do a calendar spread? Because look, I'm looking at this price action, and that's where a calendar spread would have been fantastic. In fact, let me just look at I won't be able to see it until this afternoon, but after the market closes, but I bet you we had that drop of implied volatility from yesterday to today. And I bet you could have profited on that. My question is, did you? So again, what we're talking about is setting up a calendar spread the day before earnings is released. So after market close, before market open, it would have been something that you bought yesterday and then you sold today with very little price action between yesterday and today, that's when that calendar spread would have profited the most. As far as moving forward to selling premium, I need to have Nike form some sort of better pattern. The pattern that it's forming right now ahead of earnings was one of those consolidation patterns. We do not want to sell premium into consolidation. But if we start getting a clear line of support and clear line of resistance where support gets emphasized and resistance gets emphasized more than once by touches before reversals, then I'm all into selling premium. Right now, I want to wait it out. I want to let Nike mature into a sideways pattern that would be premium, or mature into whatever pattern it's going to do after this earnings. But I hope you made money on that earnings play, because it looks like it was it was a good one.
Yeah, and we've got a couple of good examples of those earnings plays on the YouTube channel. So head on over there and search earnings, and we should have a video or two specific to that. So thanks for that, Chris. All right, our third and final name in the speed round. Interesting name, starting to get more involved in entertainment. Andy from Columbus, Ohio wants to know your take on Mattel, ticker symbol MAT, the makers of the big Barbie movie last year. And I'm assuming a few others in the works. So what are you seeing in Mattel?
Yeah, I wonder if the whole move to entertainment and playing off of these toys is because we've seen a move away from toys, the actual physical product of toys. So I'm drawing very quickly my traditional lines of support and resistance. So you can see when I draw my support and resistance lines, I have my charting software, and anybody can do this. I have it set to draw some additional lines automatically calibrated on my support and resistance lines. I'm going to tune this a little bit because I like, round numbers. So I'm going to look at support at $18 and resistance at 19.50, and I'm going to see how well that fits the pattern. Maybe my level of resistance should be at 1975. So this is definitely an iterative process. Draw your lines and then see how it fits the data. I love that. So with $18 as my level of support and 1975, you can see that I've got these additional lines drawn, SIP. One is at roughly 25%. I'm using 23.6%, which is the Fibonacci number, which is something that traders like to use, but 25%. And then the next one is roughly at 40%. Again, the Fibonacci number is 38.2, but it's, for all intents purposes, 25% and 40%. The reason why we draw these lines at 25% out of the channel and 40% out of the channel in both directions is because there's a statistical bell curve to horizontal channels, which basically says the price may bounce out of the channel by as much as 40% in either direction, but it's going to come back in. If it goes more than 40%, the likelihood that it'll come back into the channel is very low. Or the likelihood, not only will it come back into the channel, but it'll cross to the other side. So I'm not worried that we're below $18 level of support. I would be more worried if we dip down below about $17.30, $17.25. I'm still happy. In fact, I'm thinking that this is actually a great opportunity to wait for my bottom reversal signal. But when I get that bottom reversal signal, to think about buying some Mattel and buying, or if I can't do the Mattel, it is getting up there in a little bit higher price. Remember, if you buy Mattel, the stock, you have to buy it in increments of 100 shares in order to later do options strategies against that. So if you can't afford the Mattel, we would look for an option substitute, and that would be easy enough done with our options lookup tool. You just put in the ticker symbol, and by the way, We're still considered, in beta on this options lookup tool. So we're giving it away for free. You just have to get access to our web portal. But I would I look at the July? Maybe the July, right here. I really like either the $10 or the $11 call expiring July 2025. Probably the $10 actually. I like the $10 call expiring in July 2025. It's going for about $8.30. And so that even explains why we like that, because look, you can either pay $18 a share or you could pay $8.30 a share. Which would you do? That's the value of incorporating a little bit of leverage. So that's my thoughts for Andy. Andy, I think you're on to something. I don't think it's too late. In fact, I think this is an even better opportunity to buy at a low. Wait for your bottom signal, buy either stock or buy a good substitute option like that $10 call expiring out in July of next year.
Yeah, this to me feels like a good long-term hold,
Right?
sell some premium, hold, sell some premium,
I
let
mean,
one of those
look, it's
blockbusters come out, let it run
then you
up, sell some
capitalize on it.
premium. Yeah, exactly.
I love it.
So kind of falls into that boring, but not as boring as some of the other names that we've looked at. Definitely has some refined range. So thanks for that, Andy. And so AJ, this is our last show before Christmas.
Mhm.
We'll have one next week prior to the new year, which maybe we should focus on the year end, right? Maybe some of the trends that we've seen in 2024. But big thanks to our guest, Dr. David Bonanno, for
Oh yeah.
stopping on today's show to talk a little bit about the psychology of trading. Any final words, any final thoughts heading into the weekend, into Christmas? I imagine things are really going to start to slow down the remainder of the afternoon as people start traveling for the holidays.
It's going to slow down, but more importantly, it's going to be price action that maybe we don't want to trust. So, if you do any trading, probably starting from this afternoon, for the next 2 weeks, any sort of trading, be careful about the technical signals. Make sure you've got some sort of validation, and make sure if you're going to trade over the next 2 weeks that you do so quite nimbly. Be ready to, admit defeat, take profits, or be ready if all of a sudden price shoots up to take profits on the good side, right? Because things get corny over the next 2 weeks, right? You get a lot of extreme traders all of a sudden being the loudest voice in the room, because a lot of the less extreme traders, they're taking the 2 weeks off to be with family. So, be ready for some low volume but high tumultuousness in the markets. You could definitely trade that for profits, but understand the environment you're in. And as far as our guest goes, man, any leg up you can get, especially with what I think is cutting edge technology, especially if it's like free or very inexpensive, you should do it. You should check out his ebook. You should check out his lessons that he's giving away for free. You should check out that technology with the dot on the app that I've been playing with. Anything that could be a possible, leg up, I think you should check into. And it might mean the difference between you giving up on your investing dreams and you being that success, that testimonial. So what could it hurt, right? And a lot of us have time off of work for the next couple of weeks. So you've got the time to try it out.
And the links to those courses are in the chat. The links to AJ's quick links to some of his tools are also in the chat on the screen. Feel free to show some love. Hit that follow, hit that like, hit that subscribe button. Tell your friends, tell your family. Be the smartest guy in the room at the holiday season. Thank you for tuning in, everybody. We do truly appreciate it. AJ, once again, thank you for your time today. Thank you to our guest for today, Dr. David Bonanno. And thank you to everybody tuning in and blessing us with your presence. We truly do appreciate it. And I know that AJ and the trading trainer team are working very diligently and hard every day on your behalf. So we thank them as well. Without further ado, AJ, that's all we got for the show. I hope you and the family have a good Christmas. Otherwise, I'll catch you next
Same.
week.
All right.
Adios, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll